The large majority for Boris Johnson's Conservative Party sees the pound and UK shares react positively, as investors welcome greater clarity on the policy backdrop. The pound climbs against other major currencies and stock markets gain as the scale of the Conservative win removes policy uncertainty. Within UK equities, companies whose operations focus on the UK are among the main gainers. Signs of progress on US-China trade are also providing support for shares. What is next for Brexit? Azad Zangana, senior European economist and strategist, this general election brought a surprisingly strong victory for the Conservative Party. We expect this to mean that the UK will leave the European Union, EU, as planned on 31 January 2020, under the existing withdrawal agreement. After that, trade, customs, and indeed everything else regarding the UK's future relationship with the EU will need to be negotiated. It's worth noting that the existing withdrawal agreement has a potential 2-year extension already built into it. Prime Minister Boris Johnson has declared that he will not extend beyond December 2020, but it can't be ruled out entirely. Investors and economists will be hoping that the trade and future relationship talks take place quietly in the background, with the focus now shifting to the domestic agenda. How have markets reacted? Noffke, head of UK Equities, UK shares have reacted positively this morning. This election outcome in many ways makes the UK stock market investable again for those who had shied away due to the previously high level of political uncertainty. Sectors that had been mostly heavily impacted by that uncertainty, such as domestically focused stocks, mid-sized firms, banks, housebuilders, utilities and retailers, are among those experiencing the strongest gains today. The pound has also strengthened, which means that some internationally focused stocks, such as the oil and gas companies, are underperforming relative to other areas of the market. How might the election affect longer-term performance for UK shares? Noffke, it's worth noting that the UK has lagged other markets for the last 3.5 years. The chart below shows that UK shares typically trade at around a 17% discount to their global peers, the green dotted line on the chart, based on the average of 3 valuation metrics. See end of article for an explanation of these. That discount recently reached over 35% as of the 6th of December. There could potentially be scope for this discount to close, given the greater clarity on policy provided by the election result. Meanwhile, within the UK market, there has been considerable divergence between those stocks exposed to the global economy, which have benefited from weaker sterling, and those exposed to the domestic economy, which have tended to lag. Although the pound has strengthened by around. For more on this story, visit the news article link.